So what are we seeing from the SEC? Well, Alex Geralis, Chief Product Officer at cXchange, joins us on the line. Alex, thank you so much for joining us on the line.
It's good to be here, Jessica.
Thank you very much. Now, this is a really interesting story right now, and I think it has impacted the globe. We're looking at the SEC fundamentally protecting US investors, but that has an impact on blockchain organizations worldwide. What were your initial thoughts when you heard about this story?
So initially, to be honest, I was surprised that it took them that long to start coming after exchanges that were offering their services to US-based traders. But it was going to happen sooner or later. So I think it was just a matter of time. And it puts people in a strange situation where they have a very short while to clean up their act.
So what we're seeing now, so the SEC has expanded its jurisdiction worldwide. So you're saying that actually it was a matter of time before they did so. You mentioned clean up your act there. So what do you think should happen going forward for the companies which are offering trades to US investors?
Yeah. So to touch on what you said, how they've expanded their reach, not so much jurisdiction, but rather their reach. How it happened is they started going after one broker. In September, they took down one broker who was offering crypto collateralized CFD trading to US traders. And the way that happened was an SEC agent came on, he made an account, and he did a few trades, which was all he needed. Now, as early as, 2-3 days ago, they didn't come after BitMEX, but BitMEX themselves said, we're going to stop offering services to people who may or may not be in the US. And then now what we see happening is a phasing out of margin leverage trading in the US. So Circle's Poloniex exchange, which is US based, they have announced that by the end of the year they will stop offering leverage, which is very low. It's something like 2 or 2.5 to 1. And that leaves people, if they really want to trade with leverage, they have to go to the CME and trade futures. There's not going to be a lot of options left.
And that's something that we're going to touch on later on in the show, but just lightly touch on that now. What does it mean for US investors as well? Because this is something which is going to have a massive impact on them and what they can access and what they can fundamentally do.
Absolutely, Jessica. The investors, the people that are just buying and holding for long term, they don't want to be in margin anyway. But the traders that they want to come in, they want to have a position for anything from an hour up to a few days, and they want to maximize their gains, they're going to be in a more difficult spot because they have to use a lot more size. And also that means they cannot short, so they can only go long, they can only buy.
And what's your take on this in general? I think a lot of opinions are mixed from this in regards to some people saying that actually from the SEC it is an overreaction, it is slightly too much control for US investors. On the other side, people are saying that actually this was needed, this implementation and this kind of regulatory framework was needed to be implemented just to protect those investors from what we did see a few months ago and these kind of issues that have come and out of the woodwork. Do you think it was something that's positive for the markets moving forward, or do you think it's something that's actually a setback?
It's difficult to say if it's positive or negative. It kind of reminds us in 2001, the US introduced the pattern day trader rule. So you couldn't day trade unless you have more than $25,000 in your account, which for a lot of people is a lot of money compared to the $3,000 or $4,000 that you had before. And that's kind of what's happening. So if it's protection, it's not necessarily protection because people who take on too much risk will lose their money. It's just that they'll lose it a lot slower. So for people that are new to the game and it'll just give them more time. But for people that they know how to do this, they came in, they've been trading stocks or Forex for a while, this is going to hurt them, absolutely.
Great. Well, thank you so much for your insights so far. We'll join with you later on in the show to touch on this in a little bit more detail. Thank you, Alex.